Okay, here we are. Welcome back, ladies and gentlemen, to Tickle Time News. Swanee. I should do a cut of every time I mess up this opening, but this is a live stream. I can't cut it. It is what it is. Welcome back, investors, to Tickle. Oh my goodness, I can't believe it. Deep breath, right? Deep breath. That's how we trade. We take deep breaths and we check our systems and we go. So welcome back, investors, to Ticker Time News. I am Adam. Thank you for being here. This is a quick take on the market. We'll do it at the beginning. However, if the video does go a little bit longer than 15, 20 minutes, that's because you have wonderful questions, and I answer your questions towards the end of the video. So you get the quick take at the beginning, questions at the end. So you can watch it thoroughly and not realize you're missing out on anything that's important in the market, because that all happens up front. If you do have a question, leave the ticker symbol in your question in the comments. We'll go over it live during the show. If not, we'll catch up with it in the next live stream or in a separate video all on its own. All right, I know what everybody is thinking, and that's the Fed. So let's talk about the Fed first and just get that out of the way. A 50 basis point rate hike from the FOMC meeting on Wednesday, which is tomorrow, is fully priced into the market. What matters more at this point, will we get a 50 basis point rate hike or a 75 basis point rate hike at the June 14th and 15th FOMC meeting? That is the question that everyone wants to know. Not about tomorrow, about June. Now, whatever the case, whatever gets said, whatever happens, do not, and this is advice, do not get caught up in the initial knee-jerk reaction to the headline news. The headlines from the FOMC announcement, don't get caught up in it. Don't let it take you over. Make bad trades. Watch how the market trades during and after the press conference. This will be your key to know which is it going to be. During and after the press conference, which is going to provide the needed context that we need to know better on what the Fed is thinking and the market's take on why the market gives a recovery rally or sinks further, or doesn't really move at all and just trade sideways, kind of like we did today. So that's the big thing. It's not about tomorrow. That's priced in. It's about what's going to happen in June. That decision will affect the market. 75 basis point rate hike. If that happens in June, the market goes down. A 50 basis point rate hike, and the market will probably rally because we're expecting that. That's what's been in the news for the past month and a half. So keep that in mind. Okay, back to today's market. The S&P 500 gained 0.5% on Tuesday in the session, and it was driven mainly by value stocks, people hunting for the best values. That's what moved the market today. Growth stocks, no. Didn't do so good. The Dow Jones and the S&P 500 is right here in front of me. Like we said in yesterday's live stream, I said it's a coin flip or a coin toss on whether we're red or green today, because it wasn't going to move much. But I said we would stay inside this yellow box right here, and I'm going to move volume here so we can get a closer look. The high of today touched the top of this box. And no, I did not make any adjustments. And we can go into the 5-minute view here of today, what happened today, and you can see we rallied mid-morning, right? Yesterday, we broke out of it like I figured we would. Got down here. Let me turn the volume back on. Sunk down and then rallied into the close yesterday. And then today, we rallied into the open right up to the top of this box, which is sitting right at 4,200 for the S&P 500. We bounced off or got rejected off of that once, twice, a third time, and then finally a fourth time. So we were rejected at 4,200 at this red line here on the S&P 500 4 times today. That's some strong resistance, but of course the market was very weak today too. It wasn't going to push through any type of resistance. That's why I mentioned in yesterday's live stream that I didn't think we were going outside of this yellow box today, which of course we didn't. Now, let me look at the Dow Jones. Let me pull that up here for you. The Dow Jones and the Nasdaq both closed at the same 0.2% today. I'm going to draw this line out a little further because remember a few days ago on the live sessions, I said that the Dow did not make a new low when it got down here on the 3rd. Yesterday, I said it. On the 3rd, it did not make a new low and break this bottom. So what I'm doing is I'm cloning this circle. Oh, I gotta get it in here just right. There we go. I want to put these circles here on the bottoms. It helps to visualize it better. If you notice, on yesterday, when the market made a new low for the year, the S&P 500 did, the Nasdaq did, the Russell 2000 did, the Dow Jones did not. And I found that interesting. And you can see here clearly with these two red circles, yesterday's circle is higher up than the circle on February 24th. And then the other low would have been January the 24th. And of course, you know, the February 24th was a new low for it. So I was expecting the Dow Jones to settle at a new low for the year, but it did not. And I find that interesting. And now that I draw this trend line out right here, which the only time this year we've been above it is when we had our snapback rally at the end of March and we broke above it, but it has since sunk below it. And then today it kind of gets up right there at that line and then stops. So I'm seeing a bit of weakness here in the Dow Jones. Like maybe it's going to make a new low soon. So just something to keep in mind. It could totally flip and not do anything of that nature. And then remember I mentioned the Nasdaq. It also had it fell about 0.11%. So 1/10. And the Dow Jones was 0.2% down today. Real close in their final closing numbers. Now, if we look at the Nasdaq, that's what this is. It did make a new low. And you can see that here. When I make this circle, I should have done this beforehand. Let's see here. Now I want to clone it. Oh, come on. There we go. Okay, now let's take you. This thing is very sensitive. You can see we definitely made a new low, and we actually got a on the Nasdaq on March 14th a new low as well. So it's been going down. It's been making new lows. So that's that. And then the other main indice that we track, the Russell 2000, it was the big outperformer of today. It was up nearly 1%, 0.85% to be exact. And that's obvious. Yesterday was a new low for the year. Now, 9 of the 11 S&P 500 sectors did close higher today. Energy was up 2.9%. Financials were up 1.3%. Real estate up 1.3%. Materials up 1.1%. And those were the best performing sectors. Consumer staples down 0.2%. Consumer discretionary down 0.3%. And those were the two kind of holdout sectors that stayed negative today. Now, it was encouraging to see buyers follow through on yesterday's efforts ahead of the Fed's highly anticipated policy discussion tomorrow, which we talked about. Don't react to the headlines. Watch what the market does during and after, even before when the press release comes out, but during Jay Powell's press conference and then after. What does the market do, right? That's what you want to watch. Don't try to be first at this game tomorrow, because the market could flip just like that if Jay Powell says something that's really hawkish or not expected, right? So don't try to be first tomorrow. Try to be the best tomorrow. If you're trading, obviously. Investing, different mindset. Investing, we're watching for a bottom and to see if that occurs. Tomorrow could give us some clues. Now, the rebound-minded action today did help to suppress hedging interest, as shown by the 9.6% decline in, guess what? The VIX. Oh, I put the wrong one in. Same VIX, but I don't have my notes in here. VIX is the ticker symbol that you can use in TradingView, and there is a link to a free account in TradingView. We talked about this late in the live stream yesterday. Whenever the VIX over the past 2 years has gotten to a 35, it has reversed sharply. And guess what happened? It got to a 35 yesterday and reversed sharply. It was at a high yesterday of 36.6, and now it has dropped down to 29.25. Very fascinating. Very fast. There's a lot of neat correlations in the market. The VIX is one of them. Other supportive factors for this little rally that we had in the market today, more so, I think, a follow through. People looking for value-oriented stocks. That's what today was about. With the market making a new low yesterday, that brought the value investors in to see what they could find left over. To help support this, obviously the VIX does, but also there was a 4 basis point decline in the 10-year yield. US10Y is how you can get to it on TradingView. Now, it dropped, the 10-year dropped to 2.96%. It's up a little bit in after hours to 2.97. So 0.1% up in after hours. We also got a 2% decline in oil prices to $102 a barrel, and a better than expected 2.2% increase month over month for factory orders for March. And we'll talk about that in a little more detail in just a couple of minutes. But growth stocks, they underperformed today in the wake of a huge loss. CHGG, ticker symbol CHGG. CHGG. They dropped 30% today. They're up 0.1% in the after hours, and this is one that for the past 2 quarters has basically been trading sideways with all of the roller coaster moves in the market. CHGG's been just trading sideways, chugging along, chug, chug. But it finally got hit today. And this is, let's go down here. I give you a better description. It's a learning platform for students. Let's see here. Students take control of their education. study, college admission exams, accomplish goals, get grades and test scores. So an education platform didn't look bright with all the kids going back to school, online learning. It can be difficult for hands-on learners, right? If you're a visual learner, online learning may do okay for you. But when you're a hands-on type of learner, online learning isn't necessarily the best, but it can work. But now that more and more schools are opening completely up, as a matter of fact, one of our local county schools here in Northern Virginia, they're only allowing a certain number of students to do online classes. Everyone else has to be full-time in the school, and you basically have to fill out an application if you want to do virtual schooling, right? And it's a very, very limited number. I'm not even sure if it's 1,000 students for the county that they're accepting. I think it's less than 1,000, I think. But anyways, so yeah, that definitely hurt Chegg in their earnings with their guidance. So that's them. Bad. Sorry. Didn't do so good. Okay. The Russell 3000 growth index, it closed flat today, and that helped to show all right, this isn't the exact right one. Russell 3000 growth, this shows it was up 1.3% today. But if you look at the Russell, and let's see if we can get the value. I'm clicking on the wrong ones because this is completely reversed to what I found earlier. I need to write these ticker symbols down because that will help you guys too. So I need to start doing that. When I'm researching around, I need to start doing better at writing these oddball ticker symbols down. Let's see here. Anyways, I'll do better at writing. That's a promise for you guys. I'll do better at writing these down. But anyways, growth was flat. Value had a 0.9% increase, and this was in the Russell 3000 value index. You can Google it and fact check me on that. Now, some stocks that did see losses from earnings, Estee Lauder, ticker symbol EL, they lost due to earnings. Let's see, 5.8% during regular session and basically flat in the after hours. Expedia, EXPE is that ticker symbol. Expedia also lost 14%. It is up 0.6% in the after hours. So didn't have a really good job. They had a loss of 47 cents in EPS, which was about a penny better, less than a penny. Call that flat. Revenue came in flat as well. It's got to do with guidance. And I mention that often, that guidance is very important because the stock market is based off of what's going to happen in the future. All right, Rockwell Automation, that was another one that didn't do good. I think it fell 14 to 15%. ROK is the ticker symbol, but 14.5% is what it finished at. They were down. They missed. Pull this up. They came in EPS at $1.66. That missed by 59 cents. Revenue missed by $145 million or 7.5%. So they didn't do good. Now, on the flip side of that coin, Pfizer did good. Ticker symbol PFE, about 1% or 2%, and 0.1% in the after hours. Also, Avis budget. It did pretty darn good. It flew past. Even though it's had a roller coaster ride, it had a pretty good earnings. It was up 1.6%, and that is that for Avis budget. Ticker symbol CAR, CAR. Pretty cool, huh? Those two came out as winners, even though Pfizer issued downside fiscal year 22 guidance. Now, looking at a report from the Wall Street Journal, this is interesting. Look at that headline. Elon Musk spoke privately about taking Twitter public again in a few years. Now, the article is behind a paywall, so I won't show that information off. But they talk in here about Elon Musk in maybe 3 years' time telling investors that the transaction goes through, and 3 years' time, we can, or I can, speaking Elon Musk can take Twitter public again in an IPO. That would be very interesting. Man, oh man, this guy is just setting all kinds of things. Just flipping all kinds of things on their head, right? I mean, man, can this guy just push those buttons right for certain people? This is pretty cool. It's fascinating to watch, I will say. But I do find that interesting. If he can, quote, fix Twitter and make it better, make it more profitable, and then in 3 years' time, do a public offering for Twitter, that would be such an incredible journey to be able to witness and watch. Definitely fascinating for sure. So that's something that is interesting. Something else interesting today, the 2-year, I should have talked about this with the 10-year, but the 2-year increased by 3 basis points to 2.76%. And remember, you can always go look at the 2-year by going US02Y, and that'll give you the number. It posted 2.76% today in a curve flattening trend, but it's at 2.784% right now. Now, bank stocks, even though the curve is flattening again, bank stocks didn't seem to be too pressured about it. Now, on the economic data front, there were 2 important factors. One, factory orders for manufactured goods increased 2.2% month over month in March, following an upwardly revised, because remember in February it was down 0.5%. Well, now it's been revised. February was actually up by 0.1%. So not a big mover there. Shipments of manufactured goods jumped 2.3% after increasing 1.1% in February. So the main takeaway from this is that support, I guess I should say, the view that the slowdown in factory orders in February was temporary, and that orders rebounded in March as activity picked up with the effects of the Omicron variant fading. So I know I speak of the markets slowing down, right? And the second half of this year being not so good. And we already got this 1.4% contraction in GDP, but companies are still ordering their goods. That's what this report is showing us. Even though the economy is contracting, businesses are still making purchases at this moment. So with it last month being viewed as a 0.5% drop, being revised up to a 0.1% increase, that's a spread of 0.6%. So order and shipments are increasing, which could be a sign of our supply chain problems maybe starting to ease a little bit, right? Maybe orders are flowing through a little bit quicker right now. Maybe the congestion isn't getting or is improving. That's kind of what I'm reading into this report. Next was the JOLTS, or the job openings. And my gosh, do we have a healthy labor market. If you're looking for a job, you should have no problem in finding some kind of work, because it increased to 11.549 million in March, the highest number in history. The job market is hot. There is no denying that. Now, on Wednesday, in addition to the FOMC rate decision, investors will also receive the ADP employment change report for April, the ISM non-manufacturing index for April, the trade balance for March, and the weekly MBA mortgage applications index. All right, here's where we stand year to date, and it's looking a little better. The Dow Jones is down 8.8% year to date. S&P 500 down 12.4% year to date. Russell 2000 15.4% down year to date, and the Nasdaq down 19.7% year to date. Now, I wanted to quickly talk about AMD and a lesser known company. Maybe you've seen some commercials on TV for Paycom. I want to talk about their earnings right quick. But I don't want to lose out on your questions here. Are you lagging? I'm not sure. Can't see. We can't see the charts. Only you. Well, that's interesting. Well, I do not understand why. All right, so let me try this. Okay. All right, well, I'll try to figure out what's going on. I'll just go through these two, AMD and Paycom, real quick, and just I'll just be quick about it. Yeah, I'm not very technical when it comes to this stuff, but yeah, I'll look into it. I apologize for it being off. But let me just dive into AMD and Paycom real quick. I think they're interesting. I've done a video on Qualcomm and Intel, separate standalone videos about the semiconductor world. And Intel is right in the middle of strategy change, and it's going to take 2 to 3 years for them to work it out. Qualcomm is doing real good. It's diversified. And then you've got AMD. And AMD right now, I think, is in a buy box. And we talked about this one earlier. And when it dipped, let me take volume off, because we can see a little bit better without that volume on there. When it dipped right before earnings here, it got to a low on April the 27th. And that low was $84.02. That was an excellent buy the dip opportunity. And I still think, even though it was up 1.4% during regular session and 7.3% in the after hours, which is a big jump, it is sitting right on the top edge of my buy box for AMD. Now, it is possible that we could get some sell-off after this 7% jump, maybe some traders taking their profits. But if the market decides to rally because the market likes what they hear from the FOMC meeting tomorrow, then we might have just missed our chance to get a great deal on AMD. And that's why we talked about it earlier, and we drew that box when you guys asked me that question about AMD. So it's at the very tip top of this buy box right now. If it gets back above $100 a share, then I think you need to pause and don't chase the stock. But sub 100 and really, I guess the lid that I have on here is because of the resistance that it saw through the middle of April of this year. But also it gapped up through this area. And whenever you have a gap up like this, you don't have strong support and resistance areas. So resistance could drop down, or support could be lower than anticipated because of that gap up. So we got that. And then we also have resistance here back in December of 2020. So those are the reasons why sub 100 is the area where I kind of cut it off for the valuation for AMD. But anyways, you're here for the earnings. They beat by 20 cents on EPS. They beat on revenue. They guided Q2 revenue at the midpoint. It would be above expectations. They guided fiscal year 22 revenue above expectations. Q1 earnings came in with EPS of $1.13 per share. And I should have pulled up their resource page to do this. Shares rose 70.9% year over year to $5.89 billion, and that beat the expectation of $5.57 billion. Now, non-GAAP gross margin increased to 53% from 46% a year ago. So margin expansion has gotten better for them. Margins are not under pressure right now, and they're expanding and growing. That is really good, especially with the inflation. The company did issue upside guidance for Q2. It sees Q2 revenue of 6.3 to 6.7 billion. They also issued guidance for fiscal year 22, and the company raised their fiscal year 22 revenue growth to 60+%. Now, their prior guidance was 31+%. That's a big, big difference. Now, the driver was their Xilinx. I'm not sure how to pronounce that company. The acquisition they made, Xilinx, I believe is how you say it. But that addition is helping tremendously. And the new guidance now is $26.3 billion. So that's excellent. All right, so that's kind of surface stuff with AMD and their earnings. Obviously, haven't had time to dive into it yet. Paycom is one I want to bring to your attention, and I think it should be on your watch list. This is a company that's been around for a while, but it's really starting to take off, and I don't think this S-curve has reached anywhere near the top yet. The ticker symbol is PAYC, P-A-Y-C. Paycom Software is the company name. You may see commercials on TV for this one. It's technology that has to do with human resources, and basically the individual can update their address or tax filing or 401k information instead of, going to somebody in human resources and saying, hey, can you update my address, whatever the case may be. So it's a cool bit of software, especially for entrepreneurs out there. And look at this company. When I stretch this out and go all the way back to their beginnings which they began as a public company the middle of April of 2014. When I put this whole thing, their whole life here on screen, there's only 2 earnings they have missed in all of these years. That's the first thing that caught my eye. All these green bases down here, only 2 red ones. The purple means it hasn't happened yet. That's for August of this year. Amazing. And the stock, since probably about the September 2014, maybe October 2014, the stock started to rise. It reached a patch in 2016 where it kind of pulled back a little bit, but it's been a persistent climber until we get to, of course, January of 2019. It had a little dip there, and then it rises real quick all throughout 2019, a really big year. And then we have a dip in October of 2019, and you can see I hope you can see there's been a couple of big roller coaster moves. The stock right now is $308 a share. This thing got as high as $558.97. That's its 52-week high. Now, recently, it got as low as $280, and that was on April the 29th. It reported earnings today. It was down 1.4% during regular session. It's up 6.7% in the after hours. This is definitely, as a company, I could see using, right? I could definitely see using a company like this, because whatever can take stress away from the entrepreneur is a great thing. And human resources and payroll is one of the biggest headaches for entrepreneurs. And it's also an area that entrepreneurs aren't that familiar with. So hiring out, Paychex is another great company for entrepreneurs. Paycom could be a real big winner here with entrepreneurs, especially once we get through this economic slowdown and the economy really starts growing again and we get into another bull run when companies are popping up left and right. That is another good thing, and that would be good for this company. So I don't know if it's hit its low yet in this pullback. It did hit this trend line, I find interesting, but it has been trending down. Let's see here. When was this top hit? November of 21. Sharp sell-off from then to a bottom January 27th, and then it's been ping-ponging around up and down since then. It recently hit a third low. It's low for the year. Could this be the turnaround short term and it goes back up to its resistance line? That's a possibility, and that resistance would put it somewhere around $350 a share when it's currently at $308 a share. It's a growth company, and you have to be careful with growth companies right now. So this would be put it in your watch list as a growth company. Put it in the watch list for a long-term opportunity as a company. But for their earnings, this is what you really want to know. Of course, shares popped. They were up nearly 8% at one point and after hours. So it's now settled down 6.7%. The company boosted its full-year outlook after Q1 results exceeded expectations. Q1 EPS of $1.90 per share beat by 15 cents. They had revenue of $353.5 million, which was a gain of 29.9% year over year, and that beat by $10.3 million. Now for Q2 guidance, total revenue is going to be in the range of 308 to 310. The estimate was 301. So that's looking good. It also sees revenue totaling about 1.3 to 1.34 billion in 2022. So this is definitely one to keep on your watch list. If not, start taking nibbles as it is on its support area, right where it is right now, maybe 6.7% lower because of its jump in the after hours, right? Which does put it up real close to its 21-day moving average. So that kind of acted as resistance there for the company. So I wouldn't say it was a strong bounce from earnings, but it was a decent and good bounce from earnings. Hitting the 21-day moving average as resistance makes me say it could probably come back down depending on tomorrow. It's going to make a huge difference on everything in the market. So I hope you enjoyed. I do apologize for the fuzziness on the screen. I'll try to figure that out between today and tomorrow. Hopefully I can, because I love doing these live streams with you guys and I love answering your questions. So I'll wrap it up here. Thank you so very much for watching. Make sure, if you can, if you have a question and you don't mind the screen being off, go ahead, put it in. I'll do my best to answer it. But I'm a visual learner. I like seeing things, and that's another reason why I like to do these live streams here. But make sure to click that like button. Share this video. Maybe it's not the highest quality. Maybe it shouldn't be shared. I don't know. I'll have to rewatch it and find out. But click the first link in the description and join us in beating the market. I would love to see you there. Put out a new note today specifically about the Fed and what the Fed could do tomorrow and what to expect and how to react. I sent the note out today over there. So I would love to see you there and join us over there. It would be awesome to have you. All right. Thank you, ladies and gentlemen. Have a wonderful evening, and I'll see you tomorrow in our next live stream. Take care.